TradeTheNBA.com. This is John. This report is for the 25th of March. And, well, quick pivot back up of Magenta. So this was the only leftover question mark when we had white writing so high was whether or not we would see a dip below the 33 level. We were already above 40 here with the NBI Magenta, which still keeps it within the bullish configuration, and still also above yellow NBI. So from that standpoint, fairly clean. We're getting a rollover here of the blue. Crossover below on the gray line there would be the potential where any weakness then in Magenta will accelerate a move to the downside, but no real reaction from DOC, even though it's expressing weakness from both short-term, mid-term buyers. The fact that red DOC has been rising is just the momentum play from that, and from the earlier increase as well as the rising shakeout. And that was the other point we talked about. The shakeout had diminished, but puts it right back to the upside. And of course, some of this was rumors about this, that, and the other, and none of that's really as relevant as what the algorithms are doing, and the question mark as to whether or not the Fed is going to ease quicker, faster, which is the market expectation that the Fed will do nothing with the potential of paralysis from inflation and that. But the problem is now you're starting to hear about this talk of sending out stimulus for covering gas costs. So you don't have enough inflation, you want to add to it. Somewhere along the line, this idea of spending more is not inflationary, just really absent any understanding of macroeconomics at its core. It's a brand new way of thinking, and it hasn't worked out because obviously look what it's creating, and there's a complete 100% guarantee that current administration will not change anything as it relates to oil policy and things like that. So the supply constrictions are completely artificial at this particular stage, but are only getting exacerbated. And the longer this goes, the worse they're going to get. And when we start looking at crops and things like that from the restrictions on fertilizers, metals, this is going to be an interesting summer into the fall, and how that gets played out will be very interesting. Of course, the narrative from the West is that at any minute Russia is going to collapse and everything will be wonderful. It hasn't quite worked out that way. We've passed the 14 days before Russia was already supposed to have collapsed and surrendered at this particular stage, so don't know exactly where that's supposed to go from here. From a gold standpoint, continuing its rise, it's very clean and very bullish from a DOC standpoint as well, and shakeout turning around to the upside, positive extreme. So some backfill in there after there's a weakness signal. Important for noting the NBI Magenta getting back over that 25 level, which would be more sustainable from an up push going forward. So keep an eye on that one. And oil, while it gave back some, still holding it impossible levels for any mitigation on the inflation front. And TLT, which is treasuries, still holding on. We still expect that to break down further. Just no other alternative for it because actually the stimulus potential or the Fed stopping its tightening policy could flip that in reverse, but unlikely that investors are going to be willing to jump into treasuries with lower yields at this particular stage. Bitcoin from its daily had been positive. We saw the white spike above, but no subsequent dip of Magenta, either below that 25 or even below the yellow. So it's maintained its bullishness, and this is something we expected to see as more and more people become convinced that central banks just don't have a clue as to what they're doing. So this is not a surprise in any way, shape, or form. And from an intraday standpoint, it's pretty bullish as it turned around with the positive right there and continued to move higher. You should have closed out that short on that, and definitely look at the clip, because once we went low, cyan under red, it's clearly bullish. No question about it at all. ETH, busy day for it. Active back and forth, but once it caught those corresponding buy signals early on shot up, and it's just going to be back and forth. All these are is just little soft periods, and they're not really producing much of a pullback. They're filling some of the positive extremes that led from this portion right here, but the initial breakout obviously also the positive extreme, which would be a full retrace level. And I'm going to mark that with the horizontal line so you can see it just right about there. So that would be pretty reasonable from a retrace standpoint when actual sell comes in from a 50K standpoint. Turnaround came, magenta moving well above, blue also above the gray, and then DOC green leading the way. Even when it flipped over, you still had the potential for a softness with the red leading it, but when red faded below and magenta was still above, even when the weight spike took place, there was the potential that there could be some softness, but it happened under green over cyan, which isn't going to do anything other than continue to either consolidate or move higher. And then sure enough, once the magenta took its cue back to the upside, we began the next leg to the upside from an ES standpoint, and continues to befuddle a lot of people. They weren't expecting that this would be the inverse, and until you get a capitulation from a short side that they just agree everything's going to go up, you're not going to see a sell-off, which that's always kind of interesting. And you can see the back and forth of it. We were kind of like in a little miniature range for a while, going back to that previous algo level there at the 44.81, and then once we got above it, that became the support level, so to speak. Going forward, and every time tested, bounced above it, came back, tested again, still not enough selling in order to reverse that, and boom, all the way up and above. So, you know, you can debate back and forth a million times as to why the market should do this, should do that, but at the end of the day, following what the readings give us ultimately produces the best result. Because the dynamics that exist within imbalances and the way algos work is something we've talked about, and why the relationships on our readings are so important, because it's a reflection of what's actually going on in the market as far as supply and demand, as opposed to people's impressions of what things should do, because there's a lot going on in this mix, and some of it very conflicting at this particular time. And it's not like there's one preset idea, and until the market actually recognizes that the higher costs in that are actually causing a significant slowdown or decrease in economic activity, because at this point you haven't seen that. People are still using vehicles and still buying up what's available. There isn't going to be much of a change on that. There's plenty of warning signs, but that's always the best pain trade, when there's likelihood things could reverse, but still moving in the right direction. And with plenty of shorts available, the market certainly takes advantage of those opportunities, especially nothing's changed as far as the liquidity capability. That 0.25% rise really didn't change anything as far as the availability of traders to borrow, and pretty much do it at a cost-free basis. In fact, it's at a negative basis given the fact of what inflation is running at, so they're ahead of the game by borrowing money. As always, though, I will continue to update you on Skype chat. Trade well. We'll talk again later.